Crypto says institutions are back. Now, an old adage is making the rounds once again in the cryptosphere. Institutional investors are back. BlackRock Inc.'s partnership with Coinbase Global Inc. to make it easier for institutional investors to manage and trade Bitcoin was followed by another announcement that the asset manager is offering its first ever investment product directly in the token. Meanwhile, hedge fund firm Brevan Howard raised more than $1 billion for a crypto fund. Thus, the return of the narrative, big money investors are besotted by the space and are finding ways to be involved. And it's all happening as crypto prices show more signs of recovery, with Bitcoin adding 20% over the past month and Ether advancing 80%. Bitcoin's rally may be attributed to the recent optimistic headlines and continued institutional adoption of crypto, wrote analysts at BlockFi in a note. Another by Coinbase, citing the BlackRock news, said major multinational firms are making moves amid a crypto downturn. Yet retail investors, the lifeblood of the cryptosphere, have been more hesitant to jumping back in. Wounds from Bitcoin's 100% plunge since its November highs of around $69,000 are still fresh. Coinbase said that as part of its second quarter earnings announcement, that its core retail customer has been less active and is sitting on the sidelines. The exchange booked a record of $1.1 billion loss for the quarter. Now, that's part of the issue. For it to succeed or to succeed further, I think it's got to have more of a networking effect. Mark Chandler, chief market strategist at Bannockburn Global Forex, said of crypto, it's got to have more people participate in it. Now, institutional investment in the digital asset space has always been a complex topic. That's because it didn't materialize for a long time. During crypto's early days, most institutions stayed clear and was then also for a long time marketed as something that would help bring legitimacy and maturity to the industry. Still, a slew of big money firms did enter during the pandemic, with many going all in on blockchain technology and others looking to profit off the seller gains cryptos booked during that stretch. The BlackRock Coinbase deal has been described as consequential by many, though it hasn't acted as a catalyst to push prices higher more meaningfully. Still, this is a big deal because it shows that institutional interest in digital assets is far from waning, despite what we're seeing in the market. Lee Wald, CEO at digital asset investment manager Valkyrie Fund, said on Bloomberg TV. Now, BlackRock really wouldn't be doing this if there wasn't significant demand from both institutional and their retail clients. The BlackRock announcement shows a major institution linking up with a crypto firm to provide all manner of services to the institutional investors, though it would take more than one or two announcements to show real institutional engagement, according to James Malcolm, head of foreign exchange and crypto research at UBS. The hope is that at some point in the future, institutions will come into the space, institutional adoption will pick up a lot, and it will start to look more like traditional financial market, he said in an interview. But this is still predominantly a retail-driven market, and that cohort may come back when there's a sense that the bottom has definitely been reached. Small on-chain transactions, meaning those of less than $1,000, are hovering around the year-to-date average, though the main transaction size has been increasing, according to Noel Ackerson, head of market insight at Genesis, who compiled coin metrics data. Now, meanwhile, the amount of Bitcoin held in small addresses, those with less than one coin, is climbing at a fast pace, Glassnode data show. This suggests that retail is participating, just not yet in the kind of size that would add more momentum to the overall market, she said. Now, retail investors are going to be a fundamental piece of the success for crypto, and blockchain adoptions and institutions will be the next leg of growth, said David Kruger, digital data scientist at Cowen Digital. There's a network effect at play as at-home traders pile in that can build momentum, and greater masses may decide to also get in or jump in. So getting more users on the blockchain involved in the ecosystem and the space, whether that is through exchanges, decentralized or not, is going to be key to growth, he said.